Are our property markets turning? In this week's Property Insider Chat, Dr. Andrew Wilson and I give you the latest statistics on house prices as well as rentals and the strong auction clearance rates, which suggests that the property market are moving to the next phase of the cycle. Why not subscribe to this YouTube channel so you can keep up to date with the latest information, and click the little bell icon so we can let you know each time a new show comes out. The latest property downturn was very different from others I've experienced in my 5 decades of property investing. Usually at the property boom stage of the cycle, there's a significant overdevelopment by exuberant developers, and that leads to an oversupply of dwellings, particularly apartments, and this carries on into the downward phase of the property cycle. But this time round things were different, and rather than oversupply, there was a shortage of accommodation that's led to the rental crisis. This shortage of accommodations also underpinning our property values. In this week's Property Insider Chat with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market, I'd like to discuss what's currently happening in our rental markets. I'd like to recap what's happening to home prices. As contrary to what some property pessimists were hoping for, our markets have been rising for a number of months now, and that's making some people ask, have we reached the bottom? And I'd also like to discuss the strong pre-Easter Super Saturday auction results, which again showed the depth of our housing markets. Hi, Andrew.
Yes, hello, Michael. I've got a bit of a croaky voice, excuse me, but I've captured a cold somewhere along the line. I think when we talk about house prices particularly, I think we can note that the actual decline in the market, if we can say that, really did peak or bottom back in August last year. And since then, even though prices, we're talking national prices here, even though prices did continue to fall, the rate of decline was certainly month by month improving. And in other words, it wasn't as steep until we inevitably have got to February and March, where we've moved into positive growth. And it's not a surprise on the trends, because the trends have been quite clear that the market was starting to recover. And that trend's been holding since winter last year.
Despite rising interest rates. Yes. And there are a couple of other leading indicators I know you look at very carefully, such as asking prices, which often turn a couple of months before the eventual sale prices, and also auction results. Unrelated to property values, though, rental markets, which work on very different fundamentals, they've been really struck by the lack of supply at a time of increasing demand. And your latest My Housing Market rental indication suggests there's no relief in sight for tenants at the moment.
No, it was a very sobering result over March, Michael. I guess we've been looking to find some sense that the rental market had peaked in terms of what have been very high increases over the last year. But the market went the other way for those that were hoping for some relief, and it surged again over March. And we shouldn't be too surprised because, of course, March is the beginning of the academic year. And that typically means, you have activity from students and also international students coming in. And we know Australia's being flooded by international migrants. And I think that's part of the story why we did see another surge in rents. And when we look at the comparisons in terms of the actual median rent, Sydney's still the highest of the major capitals. But interestingly, Michael, we've seen unit rents are fast closing in on house rents in Sydney, which are now pushing towards an inevitable $700 per week. It's the same story with most of the other capitals as well, with the narrowing of the margin between house rents and unit rents in Melbourne and Brisbane. So the big capitals with the significant unit rental markets are showing us that tenants are looking for more affordable options, and that inevitably means that unit rents are rising faster than house rents, and we clearly saw that over March.
We also saw a surge in immigration. It's interesting that the Labor government doesn't seem to be slowing down immigration at the moment, and that's suggesting that there's no end in sight to this rental crisis, because we're just not building many new apartment towers. And with a lot of houses, with all the trouble with the industry, building industry, another big builder going down last week, it suggests there's going to be a shortage of not only apartments, but houses moving forward.
The lack of supply is clearly generating higher rents in the rental market. And we saw remarkably Sydney's median unit rent rising by 7.5% over the month, which is quite extraordinary. Melbourne up 3.1%, Brisbane up 3.3%. So there's some consistency there and just no slowing down. And the only thing really that can slow down the rate of increase of rents is the rate of increase for income. That'll, in the shorter term, act as a moderator for skyrocketing rents because people just can't afford to pay more and more. But then there's the lag when they start earning more and then rents will continue to rise. It's a vexed environment and one that I don't believe has any relief in sight. I've noted some commentators recently have been saying, well, in fact, earlier in the year have been saying they felt that the rental market had peaked and it was all going to improve. Of course, that's cloud cuckoo land stuff on the data. Until we get more rental properties into the marketplace, and we're talking thousands of rental properties, we're not going to find relief from skyrocketing rents.
It's nothing to do with rising interest rates or mortgage costs. It's really supply and demand, isn't it, Andrew?
Yeah, it's a pure factor of that imbalance. Not enough properties for the demand. We had that environment really prior to the end of our lockdown periods. So it's obviously being fueled by again, or added to by high levels of migration. You know, we've got Sydney unit rents up 37% over the past year, Melbourne up just under 30% now. That's not sustainable. And of course, the reason those numbers are so high is because we go back a year and rents were actually quite low, comparatively low in Sydney and Melbourne, because they were the two markets that really had a significant supply over demand, and but that's been absorbed quite quickly now. And that was all about inner city Sydney and CBD Melbourne, which suffered through the lockdown period in terms of lack of demand. And of course, those markets also had a lot of supply come in over the last 5 or 6 years, and that again has been absorbed, and there's nothing coming through the back end. It seems to be an incurable problem trying to get rents at least steady at this stage. But when we look at the vacancy rates, these vacancy rates they're basically all around 1% or below, Michael. And I think that they're just going to stay there up or down slightly because these vacancy rates basically mean that we have almost a zero stock level for properties that are for rent. We'll just continue to see these very low vacancy rates and not a lot of change from month to month.
Well, there's lots of talk in the media about remedies for this, including rental caps. Well, that was a thought bubble by the Queensland Premier that soon disappeared. There's no doubt that part of the story is related to lack of social housing for the disenfranchised community. But there's a large population that rents not because they're poor or can't afford to buy, because of the circumstances of their life. They may have moved job, they may have got divorced, they may have just got married, they may have moved interstate. So tenants aren't necessarily poor people, and around a third of Australia's population want to rent for their lifestyle. And so I think it's important for the government to encourage investors to provide accommodation for these people rather than using them as an ATM machine and taking whatever cash they can get out of them to help bolster their coffers. Andrew, at the same time, the housing markets have strengthened. We mentioned that at the beginning of this chat, and at the end of last month, you were the first to release the March figures. Yeah. I think that's just worth recapping, and these have been confirmed by the other data houses as well. Your figures are very robust. Each data house uses slightly different models. You use one based on quarterly median house prices, which in my mind gives a very robust answer to what's happening in our markets.
Yeah, we take a quarter snapshot of house prices, Michael, and then we forward it every month. So you get 3 months to this month, and then the previous 3 months to the next month. So it's a rolling quarterly median, and it certainly has enough observations to make it as you mentioned, a robust and resilient model. And we've seen that it tracks very similar to the other models that are in the marketplace. But it was interesting. Of course, we had the national house price up marginally over February. It's been reinforced over March. So we've actually got 2 rises in the national median house price, Michael, up by 0.8% over March. And interestingly, we had every capital or all the major capital cities recorded increases in house prices over March and the rolling quarterly March figure. And Sydney again led the way, up by 1.3%, and Sydney's median house prices increased by 2.1% so far this year. This is quite, in a sense, particularly given the narratives and higher interest rates, is almost a remarkable performance. But let's understand that despite that encouraging growth so far this year, Sydney's house prices are still 8% lower than where they were a year ago. And I think this is part of of what's driving increased buyer activity, is that we're getting those increased or rising perceptions of value in the market, that this is a good time to buy. Prices are still lower than where they were a year ago. And I think that can tend to create its own momentum, the old fear of missing out energy. And we saw a similar thing occur early in 2019 when the market was characterised by fragile confidence. But Melbourne too, prices are still 5.5% lower than where they were, 5.6% where they were a year ago. But Melbourne recorded, Michael, its first growth in monthly median prices for nearly a year. So the Melbourne market has now improved, and Sydney were the market that led the chase downwards. But now Melbourne's turned the corner and has recorded growth over the March quarter. So some encouraging results there. But as I mentioned earlier, Michael, this hasn't sort of just come out of nowhere. We've been seeing that gradual improvement really since August last year.
And it's not just houses. The unit market has improved as well, as affordability is pushing people to units because they want to live in those neighbourhoods that give great amenity, good lifestyle. They can't afford a house. People are trading backyards for balconies and courtyards. Yes. I just wanted to interrupt this week's Property Insider Chat to remind you that this is not specific property advice because we don't know your personal circumstances. But if, like many property investors, you're wondering what's the right thing to do at present, should you buy, should you sell, should you wait, you can trust the team at Metropole to provide you with direction, guidance and wealth-producing results. Whether you're a beginner or an experienced investor, at times like we're currently experiencing, you need an advisor who takes a holistic approach to your wealth creation, and that's exactly what you get from the multi-award-winning team at Metropole. We help our clients safely grow, protect and pass on their wealth to future generations through a range of services: strategic property advice, buyer's agency, wealth advisory, property management, renovations and development management services. Go to metropole.com.au and explore your options with a complimentary clarity consultation. Another test of the market was this weekend when it was the pre-Easter Super Saturday, where a lot more properties are put to auction. So it was a test of consumer confidence, but also of the depth of the market. Could the market handle a lot more properties coming on the market? Before we get into the auction results, Andrew, one of the things I'm hearing some commentators say is, with all this rise in property values and increasing confidence, sellers are going to come back into the market. They're going to put their properties onto the market and property values are going to fall. I think these commentators forget that most of these people putting their properties on the market to sell are also buyers. Sellers are buyers, buyers are sellers. That's right. And that's going to actually just increase transaction volumes. And let's have all those sellers come back in the market because they're going to want somewhere new to live.
Yeah, it's remarkable. We get this, what I call two-dimensional insights into the nature of housing market dynamics, and it's just really nonsense because, as you said, and we've been saying this for decades, that in our housing markets, most buyers are sellers and most sellers are buyers. So if you're getting more buyers, and that at the margin, it's because you're going to get more sellers as well. So people will sell their house, but they're not going to go to another house that they already own, or it's because they're moving on with their life and they will purchase a property to replace the one that they've sold. And when we look at those, it's clearly evident. And I don't think it's even worth us mentioning, but some of the commentators, particularly from the data houses, just continue to get this wrong. I mean, I think that says it all about their capacity, but that's another story. Because a year ago, we had very high numbers of properties in the market. And yet we had booming housing markets because even with those record levels of properties coming into the market, and a lot of that, of course, was to do with COVID and the pent-up demand that COVID had created, despite that, we had very, very strong auction clearance rates and price increases. So the thesis didn't sort of hold water, Michael. When you're getting higher listing numbers, it means more supply and demand, and that puts downward pressure on prices. it just doesn't add up in terms of the long-term nature of housing markets. But I guess it's all about, buyer beware and make sure you listen to the right information in regard to housing markets. But it was interesting on Saturday, as you mentioned, Super Saturday. That's the traditional pre-Easter surge in auction activity because agents obviously want to avoid the clash with Easter. And typically it can be one of, if not the biggest auction days of the year. Probably not as strong this year, Michael, as we've seen before. And I think there's a couple of reasons for that. We've got, particularly in Melbourne, we've had Easter is quite close to the March. The Labor Day long weekend was later this year, and Easter is a little earlier. So we've had a narrower spread between the holiday period. I think that the numbers for Melbourne were not what we expected to some degree, around about 1,000 auctions. But you can see that was well below a year ago, although that wasn't Super Saturday a year ago because Easter was later last year. But Sydney had a very big day for auctions, over 800 auctions, which is its biggest day for quite some time. And obviously nearly 200 more auctions than the previous weekend. And it had a 73.9% clearance rate, Michael. So all those clearance rates were certainly robust. Brisbane down a little bit in terms of auction numbers, but a reasonably strong clearance rate in Brisbane. Adelaide, as usual, floating around 80% from bigger auction numbers, and Canberra was steady despite those higher numbers. So I think those in the marketplace who are, shall we call it, traditional bears, wouldn't have had a lot to hang their hats on in terms of those auction results, which I think has finished the season, the early part of the auction, the autumn auction selling season, which usually the first part of that concludes prior to Easter. And I think it's been a very strong result, all things considered, Michael.
Well, there's lots of factors affecting our property markets. Consumer confidence is clearly one of the big ones. What the Reserve Bank's going to do over the next couple of months is going to be one of the factors. And when we come back next week, we'll talk about the latest Reserve Bank decision and how it's going to affect our markets. Look forward to catching up with you next week, Andrew.
Yeah, thanks very much, Michael.